You hear it all the time, Guru. Financial analysts say the market was up today, it was down today because of a certain circumstance. Like the market was down today because unemployment numbers were down. Are they close to being correct, or are these analysts just assuming why the market was up or down?
Well, there's always a reason why the market goes up or down. And it's not always easy to specifically put your finger on the exact reason for that. But let's break it down. So there's many factors that impact the stock market as well as individual stocks. And one of them is simply supply and demand. Just like anything else that's bought or sold, when you have a situation where there is an oversupply of something, the price goes down. When there's a demand of something because there's a shortage, then the price goes up. So when we look at what happens in the stock market, we look at the supply and demand and whether the market is up or down, and depending, that will dictate which way the stock market is moving. And what happens is when it's going up and going down, at some point it does hit equilibrium, where there is, a level playing field and just the amount of stocks that are in demand or what's on the market. Now, beyond the supply and demand factor, there are, let's say, 4 other factors. One of them being internal factors. This is when things occur inside the company that has an impact, like quarterly results are released, they lose a major client, or you have FDA approval or some type of fraud is disclosed. So those types of things happen. They will drive a stock either up or down. Of course, there's external events. They could be political, economic, social, and those things can happen anywhere around the world. Hurricanes, so weather patterns will affect stocks, certainly war, passing of new legislation. Other times we have market pressure. A stock may be on the rise or it may be falling on its own merit, or the market may be pushing it. So in the case of a bear or bull market, sometimes various stocks are just riding the wave, up or down. Then finally, you have the hype factor. That's when a stock is getting pumped up, whether it's true or not. It could be based upon various reports, internet chatter, press releases. So there's a whole bunch of factors that play into how the stock market behaves as well as individual stocks. Whether the analysts always get it right, who knows?